Second. Here we go. Whoops, wrong screen. All right. Let's see. Sorry about that. Three, no, four. There it is. Okay. All right. We are looking at the S&P 500 has been ripping to new highs, set to open right around the same area. Slight, tiny little gap down, but still very, very, very strong. And what we're going to look at today is kind of a run through of the big areas of the market and where the strength is. Now, if we take a look at the big indexes, so this is the NASDAQ, for example. This was the tariff war that sold the market off. This was kind of the choppy Q4, Q1 this year. This was the Iran war, and we've just come ripping back. But if you step back and kind of look at the trend of the NASDAQ, you'll see that we are getting a bit extended. Now, I say this not to scare anybody, not to say that, we are going to fall from here, but we are very, very extended. And I could easily see either a pullback or just kind of a short term kind of consolidation that allows these stocks to kind of set up new bases, get ready, and run higher. So I am definitely beginning to take a bit of caution. I've taken profits on a lot of my shorter term, long swing trades. I'm being a little bit more tactical. I am still long copper. So for all my haters in the YouTube saying copper's dead, it is up and rocking. In fact, it's up, what is that, 7-8% in the last few trading sessions. And IPX was one of our recent ones on Tuesday, currently sitting around 41. As a couple of you guys have mentioned, somebody said it's hitting kind of a wall at 42. I wouldn't say it's a wall. It's just where it stopped on Friday. My target, as you can see here on half this, is around 48. We'll see how it trades this morning. We've had some pretty good success the last couple of weeks, really leaning into that SpaceX theme. And listen, we can debate over whether the SpaceX IPO is undervalued or overvalued or what all that, but the fact is, it is a big, big driving theme in the market right now. It is the number one financial story. Everybody looking at SpaceX, how to get shares of SpaceX, companies that are needing on it. And so we did a couple, like one was this FTC Filtronic, which you recommended over in here and just made this monstrous move higher, still showing a lot of strength here. But the thing doubled in just a couple of weeks because it is a backdoor play on SpaceX. And then on Tuesday, and I did a more in-depth video on, was it Thursday or Friday, we got into this stock, IPX, which is another company that builds a product very necessary. I don't know, not my thesaurus. My brain thesaurus isn't working this morning, but it is a backdoor play on SpaceX. As you can see, this thing's going from 22 to 42 just in the last 4 or 5 weeks. I bought it here kind of coming out of this very small little kind of cup with handle pattern right in here, if you can see that, as we were breaking through. So far, it's gone from 34 to call it 41 or 42. My initial target for this was kind of right up here in this sort of 46 to 50 range, which is just the last place of acceptance for this stock. But it's the setup here, and we're going to walk through this today, is very similar to what it did back here at the end of the year, where you had a big retracement. It comes in, puts in this kind of shallowing cup with handle-esque type pattern, breaks out, and then rips right back here to the last place it found acceptance. Okay, so we've come down and done this again, almost the exact same pattern to a T, and I'm looking for it to once again rip to this last area of price acceptance, if that makes sense. Okay, so we are dual broadcasting both to my personal channel and the Traders Agency channel. So depending on which room you're in, I think the comments are coming in to both. The software I use kind of dual streams, but if you're making comments and I'm not responding, you may check out my channel. where they're coming in there. So, good morning to everybody. Morning from Spain. Hyperion hitting a wall. Yeah. Good morning. David, good to see you as well. Basic training modules. You should be able to get into that. Just send an email to support at Traders Agency if you're having a problem with that. Morning from Florida. Sharon, good to see you. Good morning. Philip, you as well. Hey, Tyler. What copper stock you holding on to? I'm holding copper futures. There's a couple of ways to play copper if you want just an exchange traded fund. COPP is the Sprott Copper Miners ETF. COPX is the Copper Miners ETF. So, in other words, this just holds all the mining stocks, the companies that primarily mine copper, who are going to benefit and make more money when the price rises. HG is the copper futures, which is kind of broken out ahead of some of these. And by the way, I mean, I'm looking for like $8, $10, $12 a pound in copper. This is not like a shorter term swing trade. I bought one. I bought another. I actually bought a third contract right here and just got scared and got stopped out a couple of days later, which is really frustrating because I'd be up twice as much right now. But nonetheless, this is a position I'm trying to build into and hold on to, ideally through the bulk of 2026. So it's just a play in the electrification of the world and the AI data center build out and everything in between. Mr. Burtis, good morning from a trucker over the road. Good morning, brother. You look jacked. Good to see you, man. Aloha, Bob. Good to see you as well. Jeff, Sean, Rosado. Good. All right. From Gainesville. Good morning, Michael. I won't read your comment out loud, but that's funny. All right. So, where's the strength in the market? Well, there's a couple of ways to determine this. And if you're newer, I'll just kind of give you a broad strokes overview. My goal is kind of is a three-step process. I mean, obviously we want a bull market, but I'm kind of going top down. And listen, don't let anybody tell you it's otherwise. If you're an active trader, your job is to put the odds in your favor. That's it. Not to have some rare once-in-a-generation insights. And so I'm just looking where the odds are best stacked in my favor. So that process goes strong group, top stocks in that group, and then technical breakout patterns in those stocks. So what I mean by that is, what are the leading areas which areas are rising the fastest? Because if the big institutions, wherever they're piling their dollars, whatever groups or sectors they're buying, the guys who move the markets are going to do the best. They're going to rise faster than the others. So that's why I like to keep abreast of which areas are rising the most over various periods. Now, a couple of you are asking how I got this set up this way. You have the industry strength indicator. Notice I have two of them on my charts. So I added it once and did 1, 2, and 3 months, position in the top right. I then added another one and did 6, 9, and 12 months, position in the bottom right. So if you're trying to get yours to look like this, that's how I did it. And so this kind of gives us a really quick look at what is rising. Where is money flowing? And semiconductors have had a massive run the last couple of months. I mean, if you look at the entire semiconductor sector, it's just vertical. I mean, I've never seen anything like this. Intel, okay? Intel is a $600 billion company, and it is up 200% in 45 days. It has tripled. I don't know what's behind this, the craziest thing I've seen, but a lot of these are making big moves, but they're also very, very extended, right? If you bought Intel here, where are you wrong? Well, I don't know. I think it could easily pull back to $100 or $90 a share. I'm not saying it's going to. I'm just saying it's a risk when you're getting into a mega cap that tripled last month. So these are not areas I like to step into. I wish I owned it. I wish I bought it a month and a half ago. I would still be holding it if I was long, but it's just too far extended, right? It's not where I want to buy this stock. Okay, you're buying a car that's got a lot of miles on it, and maybe it runs another 100,000, but maybe the transmission blows out. So I don't want to get them extended. Quantum is starting to look strong. And you look at the quantum area, and this showing up big performance. And these stocks, a lot of these are coming up off their lows. So this is the quantum ETF. And it looks very strong, right? It looks extended as well. But if we look at the direct quantum plays, a lot of them are down here basing and coming up off the lows. And I think we're going to see some really big moves in these in 2026. Okay, so you take D-Wave Quantum, for example. Now, it's a volatile sucker, but it tends to trade pretty well. Okay, it tends to kind of make big runs, consolidate, make big runs, and then when it gives it up, when it breaks to 50, it really just rolls over. And now, for the last, call it 3-4 months, it has been kind of cup and handle and consolidate. And it may do something like this the next couple of weeks here. But I am looking for an opportunity to buy these on a breakout higher. QUBT, very similar action. And if you want a line in the sand, look no further than about $10 a share. Okay. Now, we bought this stock last year on a breakout through 8, and it just absolutely skyrocketed. But look at this $10 area. I'll turn the moving averages off. So notice how after falling from 26, that's about a 70% drop, it found support, 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 finally broke through. Once it did, it's been resistance, resistance, kind of 9.5, 10, resistance, resistance. So that's your line in the sand. That is a very key area for QUBT. And on a breakthrough, that's going to be a great place to buy. So what I'd love to see out of the stock is just a couple more days of consolidation. I want to see it continue to absorb the supply off the lows and just kind of tighten up here, final couple of days, and then rip through. And I want to be buying it right here when it comes through the top side. Okay. Rigetti looks almost identical. IonQ, very similar as well. We're showing a little bit more strength. ARQQ, again, same idea. I think it's a little bit early, but man, if these would just set up for another week or two, these are going to be huge opportunities. Now, this is one we did, and I'm going to admit a big mistake I made. And one of you guys called me out in the comments, and I appreciate it. This is Quantum Corporation QMCO. I had this on a very short list of quantum stocks. And no, I didn't just Google quantum stocks. I forget. Maybe my analyst put this one together. And we bought it on Tuesday right here. It was one of our two trades for Tuesday because it was coming up, tightening up. And it jumped from like 7.5 to 10.5 in like 2 days. And I sold it in here. It's not a quantum stock. I don't know how it got on my list. Obviously, the quantum is in the name. I promise I didn't just Google stocks with quantum in their name. It is actually a memory stock. So kind of got lucky on this one. Big mistake on my end. But kind of goes to show that fundamentals really don't mean too much in a market like this. Okay. All right, look at your questions. Hold on. What do you think about VLN? I mean, yeah, it's ripping. But it's again, it's up 150% the last month. So, and this is what I'm saying. Like when a stock goes from, like this kind of rip, this is what you run the risk of. Is going, it's just going, it's going to, and you buy up here and you just get absolutely taken out behind the woodshed, right? Maybe these things keep going. I don't know. Nobody knows. But it's a very volatile stock. It's extremely extended. And as much as I wish I bought this thing back here at $1.50, I don't want to buy it now. I'm not saying for you not to do it. I'm not saying it won't double or triple again. It very well may. But my approach is to buy stocks when they're tight, when the price action is kind of consolidating and the pullbacks are getting shallower and shallower and shallower, when that energy is compressing like a spring, because it often kind of comes in and then just releases that energy higher. That's what I'm looking for. Okay. You can't get in the street. Dwayne, just email. Just shoot an email to support@tradersagency.com. They'll send you all that. They'll send you a link to do that. You bought Micron. It keeps going. Yeah, we own Micron, my Alpha Stock service. It's been a monster. I think we bought it 22nd. But like this will show you like where I like to buy these stocks. So look at these, and let me just walk you through like what I like to see in a breakout setup. Okay, we're going to go back in time here, and I'm going to Monday morning quarterback this thing. Okay, this is what I want to see. Okay, so this is back in September of last year. And I know it's easy to do in hindsight. I'm not saying I bought all these perfectly, but I want you to see how this typically plays out, okay? So first thing you're going to see is a big move of strength. I mean, here you got Micron that went from 62 to 120. It's a 109% move in 2.5 months. That's a massive move for a mega cap stock, okay? Now, after a stock has run 100% in a couple of months, right? Two things is going to happen. One is you got a lot of people ready to take profits. You, me, Goldman Sachs, everybody who's just made a massive amount of money. You also have institutions, the big shops, the hedge funds, the endowments, the ETFs, who aren't done buying. Like they want to own 100 million shares of Micron. They don't want to pay infinite prices, and so they're trying to keep it down. So what you get are these pullbacks. You bought it at 60, went to 120. Any sign of weakness, you're going to get out. The stock pushes back. And those institutions, the ones trying to buy hundreds of millions of shares day after day, week after week, are going to take advantage of this dip and drive it back up. You then get a stock that went to 130 once, 130 twice. People get scared, double top, whatever you want to call it. They buy it. They push it back up. It forms this kind of shallowing pattern here, this consolidation. And what's happening in there is that the supply is being sucked out of the stock, okay? It's all about supply and demand. Don't let anybody tell you it's anything more complicated than that. If there's more demand and supply, if more people are trying to buy something than sell it, the value is going to increase and vice versa. Same thing with the housing market. Why do you think in a buyer's market, prices go down? In a seller's market, a buyer's market means there's more supply than demand. More houses are for sale than people are trying to buy them. A seller's market, everybody wants to buy. There's not a lot of houses for sale. Same thing with stocks. Exact same thing, okay? And so when you have this big run, you generate a lot of supply. A lot of people are like, I want to take profits, or I'm going to as soon as this thing pulls back. And so you have to get that supply, that pent-up supply, out of the way before it can keep going. And so what happens in these periods as you're pulling back and tightening is that supply is being absorbed. The profit taking, the weak hands, as the kids call it, the whatever, all that supply is getting absorbed by the smart money, the strong hands, the institutions, whatever you want to call them. And so once they've gobbled up all that $100 and $110, $120 stock, and once they've, shaken out and scared out everybody they can, now the stock is free to run higher. And that's why I like to buy here on these breakouts, because it's much, much less prone to when supply coming in. And so if you do that, look at the nice quick run out of here. Now, eventually, the same thing's going to repeat, okay? It just went from 130 to 206. That's another double. There's some pent-up supply, both from the guys who bought here at 70, the people who bought here at 130 or 110. And so we're going to go through the exact same process again. Notice that same absorption. And this was, it'll depend. It might take a month. It might take 3 months, but exact same thing happened again. Big run higher, some sell-off, immediately bought, right? So these dips are being bought actively. And you get from November 10 to December 19th, it's about a 5-week consolidation. Once again, it breaks out to go higher. And it runs and runs and runs and runs from 240 to 440. And then this was where we bought it. Now, you might say, well, Ross, you told us you want it shallow, and then it comes in, and then it went deeper. What's the deal? Well, Nothing happens in a vacuum, right? There are forces that are going to move everything. And a war with Iran sent everything down. It put doubt into the economy. It cast out into the big capex spending. Funds went risk off. Everything sold. So this fell further than it probably would have. Without the Iran situation, look, this is mid-May. Mid-March is when it's going on. Without that, it probably would have done something like this and stayed up here. Okay? That's probably what would have happened. So you got to just take that into context, right? Like, for example, when you go back and look at charts, oh, look at this big dip in 2020. You mean COVID? When the market fell 30%? Yeah, everything fell, right? Let's just take that into consideration. So you have this, which would have been something like that went a little bit deeper, but look at the difference. Look at the 40% dip and just just bought the hell out of this thing. Forgive my French. From 306 to 470 in 14 days. A 55% move in 2 weeks from an $800 billion company. That is massive institutional buying. One last little consolidation, perfect little, whatever you want to call it, a handle, a hair, we bought right here as it came out through the highs. And that was at 480, ran to 746. Good God, we're gapping again this morning. And so it's going to be up, what is that? 66% in 16 days, which is, again, insane. So does that make sense as far as like buying as these stocks break out? Everybody understand like what we're trying to do? I'm not saying, look, this thing was extended on Friday. It's about to gap up 7 or 8% more today. I'm not saying they're going to stop. And if I owned it, I wouldn't be selling. But I'm not going to buy up there. It's just a lower probability place. It's why I hate when I miss them. Like, I missed the breakout. And I'm very disciplined about only buying as we come out through there. Okay, makes sense? What platform? This is TradingView, the charts. I've got my Interactive Brokers account linked to it. It has an API. There's a handful of brokers. Interactive Brokers is one. What are the others? I know Moomoo links to it. One or two others. If you want, you can just log into your brokerage account from TradingView. I do it because I broadcast a lot of this stuff. I'd rather not have trading platform over here and charts over here. It's just kind of easier to have it all in one screen. But yeah, you can do that. JC, you bought on the 8th. Oh, you bought Friday and you're up 7%. Yeah, what would my stop loss be on Micron? Well, it depends where I bought it. If I'm buying it here, like, it's probably going to be the low of the next 15 minutes. If I'm buying the gap out, I'm going to do an ORB trade, opening range breakout. Now, if I own from back here at 470, I'd be trailing my stop up probably with the 10-day moving average. But it's a long way to go, honestly. I'd be choking this thing off. I'd be going, okay, if I bought it here, right, and my initial stop loss was here. Whoops. Come on. There we go. This would be a good exercise, kind of give you an idea of how I approach it. Not saying this is the right way, but it's how I approach it. So my initial stop loss was this red line right here, okay? So when we issued this trade alert, we were risking 9%, okay? Yes, we're up, whatever it is, 70% on a 9% risk in 2 weeks. So you get a big, powerful move like this. Usually, you'll see something, and Minervini calls it a natural reaction, where you get a big move, it's going to have some kind of reaction and then continue. And each time it breaks a successive high, I'll raise my stop up to the swing low. This one has just gone parabolic for the third time in a year. So I would look at any little pause, like when it ripped up to here, stops up here at the low, at this low. When it ripped up here to 666, now it's ripping higher, my stop would be up in here. If we gap up and go parabolic today, stops at the low of that. I'm just choking this thing off. And to be honest, I'd be selling into this strength as well. I'd be going, all right, I'm up 60, 70% in 2 weeks. Sell a third. And just take some on the way up. You're never going to go broke taking a profit. You will go broke, taking a 5% win on a 10% risk. But if you're up 6, 7, 8, 10 times your risk, yeah, sell some. Don't be scared. Okay. Who is your next MU or SanDisk? Man, I've missed some trades in my day, but SanDisk is probably my biggest disappointment. This I've never seen anything like this. SanDisk was back here at $50 not 2 years ago, like 10 months ago, and look at the setup. I missed it. I've missed before. I'm going to miss again. But look at this setup here. We stretch this out. It's everything I'm telling you guys to look for. Okay. Now this was on a IPO, so you didn't have the big strength before. But look at this. Comes in, shallows, just absolutely picture perfect action. Breaks through in here. Should have been buying this thing at $50. Okay. It went from 50 to 250 in 2 months. And then look what happened next. Do you see the buy point? Let me take this at a log scale. I'd like to hear. Okay. At what price, if you missed the first buy, which I did, and this was just not a leading group at the time, or it was a smaller group I wasn't tracking, roughly what price should you have bought this stock on a breakout? It's going to be a good exercise. Anybody? Type there in the comments. Thomas, they run up at the open. Sounds like it's better to buy as soon as it opens. I would buy when it breaks the high the first 5 minutes of trading. And my stop would be at the low of the first 5 minutes. Yeah, so exactly. Right around 250, right? You see the pattern here? 250. Some people said 280. I would probably say, yeah, about 265-ish. Maybe in here a little low. But yeah, right, 250, 280, kind of right over in here. After this consolidation period, right? And look, if you bought here at 300 or here at 2, like whatever, but right there as it's coming out, it's a massively strong stock. And then we got a similar action. This one I don't think was very buyable. It instead of consolidating, I would have missed this 100%. I did. But see how it started to get wider and wider. And a lot of that was because of the Iran situation, but it just never really gave you a clean setup. In hindsight, we can kind of look back, oh, it's consolidating, then it broke out, but I would have totally missed that one. But this is generally what you're going to see in a leading stock. If you go back and look at the big winners from the last 50 years, this is what they do. They go into a big stage 2 run, they break out, they consolidate, they break out, they consolidate, they break out, and this, I mean, $50, it's 1,600. Man, I should have owned this thing. That is a 3,000% return. 100 grand would be 3 million. God, I should have been in this thing. Anyway, okay, I missed it. It happens. I'll miss more. Copper, HG or COPEX. How much leverage you want to use? HG if you want the leverage. I've got only 2 contracts, which is about 50,000 pounds of copper. So you figure 50,000 pounds times $6.50. That's worth, well, it says here $320,000. So you're getting leverage. COPX is the miners. You're getting a bit of leverage just in a different way. You're leveraging their profit margins. And then COPP, if you just want direct dollar for dollar copper. Copper goes up 20%, you're up 20%. It goes down 5, you're down 5. DRAM. Let's see who's looking at DRAM. Woo! I don't know what's that. Oh, the ETF. Okay, the memory ETF. Yeah, these memory stocks. I mean, look at the demand. They spin these things out when there's demand. 28 to 55. I mean, just going. Just going. RXT. Is that Raytheon? No, Rackspace. Oh wow. Yeah, I mean it's another really I mean from 40 cents to $6 basically. Goodness. In a couple of months. This is going to be a small cap, isn't it? No, 1.3 billion. Wow. All right, market's opening in 60 seconds. Let's check on our IPX position. I want to see how this thing trades into the open. Now, again, I put on a swing trade. I bought it in here. I was risking, 15% to try to make 42. So roughly a 3-to-1 reward to risk ratio. If you bought this with me and you're up, what are we up on this? Let's just look at the percentages instead. Um, yeah, 20% or so. You could take some off here. But I really think it should run to this kind of 46, 50-ish area in there. So I've got orders you can see to sell half on that move. And again, this is just a theme playing out of the market, just like memory has been a big theme playing out of the market that Ross has missed in a colossal fashion. I did catch nuclear last year. I caught most of the big trends. I caught gold when it broke out in 2024. We've been long silver. We've caught most of these trends. I missed that one, and I hate it. NET, do I sell? Yeah, I mean, Cloudflare to me just doesn't look that good. It's very, very choppy. It's not trending higher. It's failing its moving averages. There's a relative strength rating of 63, putting it right in the middle of the pack. And it massively failed its breakout. Whatever this earnings number was, or this earnings news, it just collapsed on Friday, 23%, and is now opening up near the low of that session. So I would either sell it or put my stop loss here at like 192 and say, that better be the low of this sell off or I'm out. Okay, so it might catch a bid this morning, but if it breaks down here below Friday's low, which was 192 and a quarter, dump it. I would dump it. I won't tell you what to do. I would dump it. Because, look, unexpected news came. It was realized by the market. If that's the end, okay. Like if they're going to use this as a buying opportunity, fine. But if it keeps going lower, I'd be out of it. Nvidia's climbing. Let's take a look. Oh, yeah. This is actually a pretty good buy in here. Oh, wow. Man. Let's see what this thing does. Okay. And this is not a bad place to buy this, I don't think. So ideally, again, this is just my style of trading. I prefer to buy them coming out of these big, multi-month or multi-week consolidation zones. That's just my preference. But second to that, I'll take what I can get. And this stock doubled. We had about a week and a half consolidation. It's now breaking out. So we opened at 18. It's already at 19 and a half. Now it's right here into the highs. So what I would do is trade what I call a 5-minute opening range breakout. We've done this before. Where you take this one might be too wide though. Yeah, it's getting pretty wide. So what you do is you take the opening range, the first 5-minute opening range. So this is a 5-minute candle. Okay, so you'd say there's the high, there's the low. You give it a few minutes to kind of trade away, to absorb, sell, buy, do your initial out of the gate market on open orders. And then if it then breaks through, we buy and our stop is here at the low of the day. And it's a way to kind of say, all right, well, if you're going to run and stop the low of the day. By the way, guys, the link is on the screen, but if you are not, for any reason, a member of our Black Ops service, be sure to sign up for that. It's just tradewithross.com. It's $5 for the whole year. You'll get access to this industry strength indicator you can have for life on your TradingView charts. You get all these live sessions every Monday. Right now, we're doing them on YouTube, but we might have to go back to Zoom if YouTube doesn't like them like it did last year. You'll get another Thursday session live also over Zoom. You'll get my weekly newsletter. You'll get a couple of bonus reports. You get access to my team. It's a lot of stuff for $5. We do have some higher end premium services we sell as well. We alert people and text them, throughout the week. But if you're not already a member of Black Ops, be sure to sign up for that. Just go to that link at the bottom of the screen. Just tradewithross.com. 2, 3, 4. Okay, we're on the 5th minute. I mean, this thing could be a little too wide to trade this on. I mean, we're 4 minutes into the market. This thing is up 11.8% and climbing. Yeah, it is ripping. Good night. I mean, Somebody knows something. The demand for these is just, I don't understand what is happening here. Laser for opening range breakout. Let's see. 2, 3, 4, 5. Yeah, maybe. Let's see. No, not this one because it's an inside day on Friday. See the rejection? See how it opened Friday here? Ran from 77 to 87, came all the way back down. Now we're staying. I wouldn't do an ORB on this. Normally, I'd want to do an ORB when it's up into new highs. All right, there's a 5-minute opening range. It's a little wider than I'd prefer. It's, in fact, a heck of a lot wider than I'd prefer. No, no, I'm not doing this one. But if you wanted to, I mean, I'm not risking 12.5% on the 5-minute range. It's just too wide. But if you're just dying to get a piece of this, that's probably the way to do it. I mean, if y'all really want to, I will. But I'm gonna take a baby position of like 100 shares. But this is how you'd set this thing up. Okay. You'd take the high, which is 2038. You'd put a buy stop order, call it a penny or two above that. So it'd be 2040. You then put your stop loss beneath the low of the day. So the low here is 1813. So that stop would be, call it 1810. Oh, wait, hold on. I've been having more problems with this trading view link lately. Come on. Okay, so I'll do this for illustration purposes, just on 100 shares. It's a baby position, but this is how you would set that up. And again, I typically prefer to use this on like stocks that are gapping higher. If you have a really nice daily consolidation, like those charts I was showing you before, and then it gaps up, meaning you're waiting for it to break $20 to buy, it opens at 23. This is kind of how you do that. Now, how on earth did that not fill me? Is happening? Am I long this or not? Look at the slippage. 20 cents of slippage? Wow. Okay. All right. We'll see what happens with that one. If you take it, this one, any of this strategy, always low of the day stop on this kind of strength. And always, by the way, the ADR, the average daily range, never risk more than that. You should be getting it as it's emerging there on these types of trades. And if you're trying to catch like an opening range breakout or initial just gap and run, never risk more than that. How is it Yahoo sees Intel skyrocket faster than Vanguard charge? Well, all those are using delayed data. Yeah, Yahoo's like 15-minute delayed. Vanguard's probably half an hour delayed because Vanguard is buy and hold people. They have no active trading people. It's not their bag. They're not going to spend the money on real-time tick data for sure. Intel up, yeah. Let's look at the 4Us. Okay, yeah, I still like Energy Fuels in here. It tried to run prematurely this week, which is good. I want it to kind of reset, but I don't think it was ready, which is why I didn't buy it before. So I'd like to see kind of something like this. I think that'd look really, really nice. Go back and see if these quantum names are looking all right. No action in these today. Definitely all about the semiconductors. You see this, I mean, you'll see some of these setups. It's just, God, I mean, they came out of nowhere. They're all just so okay. AMKR might be a better one. You got kind of a high tight flag here. This could be a breakout through 79. But notice how it made that 100% move in a couple of weeks and now it's kind of paused and tightening up. This is just where I'm a little more comfortable. And honestly, you could have even done it. You went down to like a 65 or an hourly chart. You could have even done, if you really wanted to get cute and fancy with it, something like this, where you get this just parabolic style run. It finally pulls back, and then you get this little wedging action, and then getting it in here. It's there's a lot of ways to do this. The fact is, I don't care what your style, your strategy, your go-to pattern. If you're buying semiconductor stocks, you're making an absolute fortune. You don't need to overthink this right now. But I really want to be going in, out of tight patterns uh, on stocks is extended. So AOSL might be Bible here. A little pullback to the 50-day moving average. If you bought this stock, I'd put a stop loss. If you're just looking for something in the semis to buy, it's not overly extended. You could buy this, risk 6 or 7%, put a stop at 35 beneath that swing low. ASML. Yeah, there's signs of a consolidation here. I'm surprised it's not ripping with some of these others. Notice Broadcom did pretty much exactly what we expected it to. Now, this is something I drew weeks ago when it was running, but I said what I wanted to see would be a move right back here into the highs, a little consolidation, and then continuation. And see, that's pretty much exactly what happened. Right here into this last supply level, consolidate for a week or two, and now trying to break back out higher. Camtech, nice trend. Little dragon head formation, AVT, probably buyable. Some of these are smaller. Credo looking pretty good. I mean, all these have doubled, but notice how we're getting these little wedging, tightening patterns going up here to the highs. I think you could take this one above 200, stop at a buck 80, risk 10%, see if the thing keeps running. Barrick, B, let's see. Whoa, what happened to a Barrick? Is gold on the move? Let's see. No? Something happened with Barrick. Oh, they reported earnings. Yeah, big earnings beat. It was a great 5-minute opening. This is why I do the 5-minute opening range breakout. Of course, I didn't see your comment 10 minutes ago, but see here the big gap. So, like, look at this in Barrick. Now, it's not perfect, okay? But this is a far better time to do this. So, you're watching this stock. All right, clearly gold is a big play. We're all very bullish on gold. It runs, from 30 to 50 to 55, pulls back. There's your support. There's your support. It breaks through. Now it's resistance. So you can see that line of saying, and what I'd be looking for, honestly, I probably would have loved it to do kind of like this. But we're watching this form a shallowing pattern. So we know we're looking for breakout above 44. Okay. And then it gaps up to do so. So it gaps up, 3 or 4% on earnings, on a big earnings beat, which is a big catalyst driver. There's your first 5-minute opening range. We bracket that. And you buy the break of the ORB at 46.15. Your stop would have been about 4%, which is a little higher than the ADR, the average daily range. So I would have just risked, 2.9 or 3%. So I would have bought here, put a stop loss at, say, 44.80, right around there. and see if this thing will run. And when a stock gaps, in other words, it opens up much higher or lower than it closed the previous session, it means something has fundamentally changed. In this case, the earnings came in much higher than analysts think. It could have been a drug trial. It could have been a development in the Iran situation. It could have been a piece of legislation that passed or a tweet from Trump or whatever the heck it is. Something big has changed. And so when you get a change so significant that the stock makes a big move and the market's not even open, that's either going to be the start of a longer term trend, a gap and run, or it's going to gap on news. In other words, buy the news, buy the rumor, sell the news. It gaps up. Everybody's perfect. It's up big. I'm taking my profit. I'm selling it. And so it gaps up and they take advantage and they sell it and it drifts lower. Kind of a gap and crap, as I call it. So that's why the opening range breakout could be powerful. It's like, look, I'm only going to risk the first 5 minutes of trading after this catalyst event. If this is the start of a genuine catalyst, this is probably going to be, a $55, $60, $70 stock in a few weeks. If not, if people it's going down, it's trending lower, they're going to take advantage and take their profits, it's probably going to resume this. And so if I can get on one side of that by risking 3 or 4%, I'm going to do it. Now, I'm very bullish on gold. I have not sold any gold. I've not sold any silver. And that same pattern I've been showing you guys this morning played out numerous times in the big gold run. And again, just look at this pattern. So big run, big move higher, shallows, consolidates, big move up, shallows, consolidates, big move up. You see how this works? In a good, real, genuine, demand exceeds supply trend, this is going to happen over and over and over again. Run up, we were coming in, I thought we'd go, and then it broke. It broke over here when the Iran war, kind of put down, and it came down to 200. So I'm not saying it's over for good. I'm saying it needs to set up again. And it looks like it's trying to here off the lows. Same thing, absorption of supply. Show me the buyers are coming back into this. They're building positions. They're outsizing, outweighing the supply. And I'll buy on this next breakout for a move higher. And if you want to see why I was so incredibly bullish on gold in March 2024, why I put out my weekly newsletter saying it's the beginning of a gold super cycle, why I started buying physical and futures and ETFs, take a look at this. Now, we're going to go back in time to what I believe is the initial breakout in gold over here in first quarter 2024. Okay? Now, notice here on the daily chart, turn the moving averages off. These won't matter here. Notice here on the daily chart, this pattern I've been showing you, right? It's not perfect, but it's decently clean. Big move, comes in, kind of shallows, bases out, right? Breaks out here through around 2,000, 2,100, okay? Now, let's go to a weekly chart. On a much bigger picture, we're seeing the same thing. Sorry, do that the wrong place. We see the big run up in 2019 and 2020. Resistance kind of at this 2,100. Comes in a little deep, but then begins to beautifully shallow up here in that breakout pattern. Okay? Multi-time frame alignment. And then let's get crazy and go to a monthly chart. And look what we see here. Same thing. Big, huge run in the early 2000s. Really 15-year shallowing, base, breakout in here. Everything pointing to a breakout through 2,100, 2,200. That's why I was so bullish on gold. And as you can see, that bet paid off handsomely. But if you put it in logarithmic scale, you realize we're probably not done. Pretty easy to justify or assume we could make a move up here to kind of $8,000, $10,000, $12,000 an ounce. Because historically, these big multi-year runs in gold, this one was peaked or trough to peak 700%. This one, low to high, was 650, right? So if you take it from the low, that puts you up here around 8,000, 8,500 bucks an ounce. And if you go back and just measure the breakouts through the highs, so in other words, once it broke out here to new highs, once this kind of base broke out here, those are about, whoops, that's that one up, 380%, give or take. This one, about 340%. So from here, you're looking 340, 380, which puts you, right up here, about $10,000 an ounce. None of that's complicated. I mean, my 7-year-old can pretty much gas this, although he's working on percentages. But that's why my target has been $8,000 to $10,000 an ounce in gold. And all this was before we had massive deficit spending, before we were $38 trillion in debt. They are spending $2.5 trillion per year, more than they bring in. After taking 37% of your and my labor, after that, then they're needing to spend $2.5 trillion more. And that's in a booming economy with record GDP growth, with surging asset prices. Imagine what's going to happen with this insane spending. And it's not on either side. Trump did this. Obama did this. What's the last moron's name? Biden did this. Bush. They all spend more. Okay, it's not a one-side party. But they decided they have no budget. They decided that back in the 90s, and they won't change it. So that causes huge, huge, huge inflation. That's why we're seeing all these central banks buying gold. So that's why I'm saying, now I'm like, okay, we could see 12, 14,000. Because the situation, the fundamental case for gold is way, way stronger. The situation is way worse than it was in the 70s, in the early 2000s. So that's my soapbox speech for why 8,000 I think is a low-end target. 10,000 is probably more in line. And 12, maybe 14,000, given the fundamental backdrop for this as well. Okay? So, yeah, there's a reason I have 6 figures in physical gold and silver. And that's what it is. Okay? So, but anyway, this all started with, before I went on my stupid rant, trying to show you this same pattern, this same supply and demand dynamic showing up on multiple time frames. And this is going to work for you in stocks. It's going to work for you with crypto. It's going to work in gold and silver and everything else, because it's just about the visual display of supply and demand. That's all it is. In fact, I would argue it works better in cryptocurrencies and in metals, because that's all there is. There's no earnings beat. There's no CEO diddling his secretary. There's none of that stuff. It's just hard commodities trading supply and demand. All right, so here's that 5-minute opening range breakout on the Vetus. So far, it's working. Now, what I will do, or what I would do, again, I'm just like, when I try to day trade these things, I want to see the same thing I've shown you in all those weekly and daily and monthly charts. I want to see a move, consolidation, a move, like if it's going to be a big trending day, that's what you're going to get. So the way I trade these is, you get the big move, consolidation, breaks. We bought in here. It consolidated, pulled back. As it breaks through the highs, my stop loss then comes to here. Okay? If it goes on another run and comes up and then pulls back and break, as soon as it breaks through to a new high, my stop loss then comes to here at this low. And I'm just riding this trend for the day. Okay? And my goal is to get a decent little run out of it. Normally, I'll take a big position on these. I didn't do that now. Get a third of it or half of it or 2/3 of it all before the end of the day. And then I've financed my position. I've got a free look now into this stock, whether I leave the stop at the low of the day or put it at, break even, whatever. You got a free look on this trade for the rest of the day. So at this point, it kind of broke, not by much, did it? 30 cents, we'll count it. So I just bring my stop up, in this case, pretty much break even, right there beneath that swing low. So at this point, we have no risk on the trade, okay? Now, I'm taking a tiny little position. It's really more for illustrative purposes. But, if it hits me, All right, I'm long at what? 2060, my stops, so I'll make 6 cents a share, assuming I don't get massive slippage like we did the first time. My buy order is at 2040. I don't know why it slipped that bad. But that's the general approach, right? Okay, sorry, I'm ignoring your questions. AAOI, Applied Optos ripping? Let's see. I mean, say so. I don't know. Is it? Oh, it's up from the open 14%. Yeah, but look, this stock moves. I mean, it's just what it does. It moves 12.5% a day. When you look at a daily chart, it doesn't look that impressive. And it's not at a place I'd want to buy it. Like it's still in the meat here, right? So if you just happen to buy that dip, sure, you're doing great out of the open. I'm not sorry. It sounds like I'm attacking you. I'm not attacking you. I just it's not an ideal buy point for me. SMCI, Super Micro. Yeah, it's a bit extended as it's definitely extended as well. It is trying to get through this. I mean, not an awful spot to buy it. It's just if you're lagging stock, Super Micro, if you're not familiar, they built like this bolt-on deal where during the big AI run, you could essentially buy this stuff, bolt it onto the hardware you've already got, and boost your compute for less money than going out and buying $40,000 Nvidia chips. And then came out there's some accounting discrepancies, and the CFO stepped down. It just got murdered and hasn't really been much of one ever since. It's still too wild for me. When you're just stock gapping down 30%, gapping up 25, wouldn't be my favorite. I'm not telling you not to trade it, but that Mosaic looks truly, truly horrifying. Um, I don't see anything, at least from a technical standpoint. Okay, from a technical standpoint, it has zero redeeming qualities. Um, it's in a massive downtrend. It's making new all-time lows. The only real support it had was kind of over here at this, call it 20, 23, $24 range. It's now breaking that. Um, Nobody wants this. I'll say that. There is very little demand for this. Could be a great company. I don't know. I've traded it before. I don't dislike Mosaic, but for whatever reason, the stock is hugely, hugely out of favor. TMC on the metal side, yeah, this looks decent. It's not perfect, but it's come back in a pretty big way. You do have a pretty good chunk of supply right here above it. So again, just kind of draw a line. It's not gonna be perfect, but kind of get an idea of where the action is. You see the support, resistance, right? So kind of in here, the 6.5, $7 area. So I wouldn't buy it here. It's having a really hard time struggling. I'd love to see it kind of do this, right? And tighten up. Just get all this supply out of the way and then make a fresh breakout where I can buy it higher. That'd be ideal for me. It doesn't look bad. It's definitely trending in the right way. It's up 50% since March. It doesn't look bad at all. I think it could look better for me to initiate a new position, right? EOSC, yeah, it's ripping. Um, Earnings play. Nope, not on earnings. Yeah, I mean 25% Friday, another 8% today. Big, big move. And going off the lows, but you can see kind of signs that it's absorbed all that supply, right? That it had to get the sellers out of the way before it can rally higher. And hopefully, this is the start. You got nothing but air up here to like $10 a share. MRAM made a boatload today, up 28%. Good night. Yeah, that's huge. Now look at what's happening here with MRAM. See, the gap was enormous. I mean, it opened up 35% higher than it closed on Friday. And what are people deciding to do with that gap so far? Well, they're deciding to take profits on it. You had a little bit of excitement, but for the most part, like now they're selling it. And Again, this doesn't mean anything like permanent, but if this was a holy crap, this is so good, this changes everything, it would have kind of done this, right? And this is very telling, this first half hour, that right now, investors who own MRAM are taking this opportunity to sell, not to buy more. And again, I would too. Like the thing was up 330% in a month and a half. I'd be selling too, without a doubt. And this is a very, very telling, usually a big, big sell signal here when you get two like back to back extended gap run days. So, I mean, look at this, just a big gap in here, but this was the tell. Big 27%, 25% up day. Today, another, what was this? 40% in the open. Like that's what's called a blow off top. This is very, very extended. And anytime you get a 380R move, especially two of them back to back or close to two of them back to back, it's usually a great place to take some profits. It was $20 on Thursday. It was $38 this morning. That's too far, too fast. We broke 42 on IPX. Okay, yeah. It's holding in here. I mean, I'm not totally surprised it stalled a little bit. There was this big supply cluster and it's kind of 40 to 42 from February. So I'm not overly surprised it stalls in here. I do want to see it kind of do this. That's what I'm hoping for. And notice I bought 700 shares. Okay, my sell orders for 350. So it's not to close it all out, although there's nothing wrong with that. What I'd like to see is a run to supply, take profits on half. Maybe you pull back in here a little bit. Maybe you go deep. Who knows? Kind of, but tighten up again, and then make another run here to about 60. And if it does this, when it hits 48, my stop loss will go to break even on half. If it pulls back and breaks out, my stop loss will then rise at a swing low, which is probably 42, 43. I'll be targeting 60 on the other half. I don't know if that's going to happen or not, but that's what should happen. That's what I'm positioning for. I'm way behind on questions. Let me see. Blackstone? Really? I mean, it's fine, I guess. It's a massive, you know, asset manager. They manage like 10, 12 trillion dollars. These can't move 60, 70% in a couple of weeks. Very, very unlikely. ICHR, what is that? Ecor? Yeah, it looks great. Real nice. Now, this is what I'm talking about. See the gap here on the 8th? Let's go back in time, see if I can show that. Come on. Oh, don't. See if it'll give me a 5-minute chart back then. Yeah, okay. So look at the difference here, right? This is the 5-minute chart. Now, this would have been a perfect opportunity. So it was a stock setting up. It gaps up 9%. Here's the 5-minute opening range. I don't know if this would have worked or not. We're going to find out. You bought it in here. Let's see what would have happened. No, tagged you. Okay. Well, I thought it might be a better example. Obviously a profit take as well. But yeah, looks great. Mars and UFO. Mars. Oh, the ETFs. Yeah, this is good. I mean, it's a recent ETF. Just started trading back in March. I think both these are good. Again, it's wind at your back on the space theme right now. The SpaceX IPO has driven massive retail demand, and anything attached to it or holding it or benefiting from it is rising. And so it's not a bad place to be. I mean, I really like QBTS here. They get a nice little handle forming. You could probably buy a break above 24. Risk about 10 or 11%. Relative strength is, I mean, think about what's happening here. This stock is you know, 50% off its 52-week highs, and it still has an 89 relative strength rating. Lots of strength here. Coming through, it's stalling at the 200-day moving average, which is pretty common in this type of situation. Yeah, you could honestly just buy it here if you want. You wanted to give it some room. I'm not giving it that much room. Maybe the 10-day moving average, about 12%. But yeah, I mean, these just look really, really strong. I think D wave, you've probably got to move into 30, potentially up into the 40s. Earnings before opening bell. Okay, so yeah, I mean, you really got to take some risk if you're going to buy it into the earnings report tomorrow. Sigma Lithium. Yeah, it broke me. I got stopped out of this one just barely. I think I'd put a stop loss here, but yeah, 8% down. Yes, yeah, I think it's broken. It just shouldn't do this, right? It shouldn't make a new high and then immediately dump 12, 15% all the way into the low of the base. So I think it just didn't work out. You mean HBM, John? HUD Bay? Yeah, HUD Bay looks great. This is another one we did in our Alpha Stock service. You see the breakout, that the mineral theme playing very strong. And it's just everything we've been talking about today. Big, big strength, tightens up, shallows out, breaks through. Perfect, absolutely perfect retest buy to add on. Um, Now it's kind of forming enough. I mean, it just kind of looks like it wants to do this and get going again. So yeah, I think HUD Bay looks great. Um, DXYZ. So how many of you guys bought DXYZ when I did the video on that one? Again, why is this thing going nuts? Destiny Tech is going nuts because it holds private companies, the largest of which is SpaceX, with a 16% weight. It's just a retail hyper buzz, big demand stepping in. It's not a fundamental story. I doubt the thing is worth anywhere near uh, the market cap it's currently commanding. So if it were me and I bought, you bought over there, we started talking about this, I'd be selling. I would sell at least half my stock here, if not 2/3. Anybody up some money? How much money y'all up on this thing? Anybody? Jerry, you're up 100%. Tomorrow you're up 90. Okay. I don't know how to pronounce that name there. Yeah, well, that's good. But don't let this get away from you. Levita's pushing back at the high. So again, I got a tiny position, so I really don't need to do this. But like, notice how each time you get these reactions, you come in and then you push back at the highs. I'm continuously tightening the stop up, always improving my scenario. So like now, if it stops me out, okay, I make 50 cents a share, right? If it runs again and does it, I'll do it again. But if this is how I like to ride the momentum in these shorter term, these gap and go type positions. Look at you guys. Great job. I made some real money on that one. Good stuff. Love it. How long should we hold? Well, as they say, the market can remain irrational longer than most expect. Yeah, and I wish I could tell you, here's the sign. I mean, there are things you want to look for, like the main one being a 380R day to start taking profits. Okay. So this thing on average moves 7.5%. Okay. On Friday, it moved 21. Okay. That is a 380R day. Today, it's up 23. That is another 380R day. 2 in a row, I'm selling. Do what you will. If it were me, I'm not going to give you specific advice to what you should do based on your position and your risk tolerance and all that. If it were me, I'm out of 3/4 of this right now. Okay? Those are back-to-back sell days. You get the biggest up days on some of the biggest volume. It's massively extended, and you're going right into the last place this thing peaked. And it's kind of a big range, but sort of in this, I'd call it $55 to $75 range, which you're right slap in the middle of. Okay? So, for those reasons, I would be selling. I wish I held longer like you guys did. I mean, great job. I kind of went heavier into that other stock, the FTC we were trading. And if y'all were with us last Monday, we cashed out of FTC right here. I'm sorry, it was FLTC. We did the over-the-counter one. But look, here's how we cashed out of this one. Now, where would you have liked to have sold this stock in hindsight? About $8, right? Okay, here's how we traded this thing last Monday. We were long this thing from $4 or $5. It ran. Let me go to a 1 minute. Excuse me. I'm sorry. We did the exact same thing I'm showing you guys today. Okay. And anyone who was in here, or go back and watch the video. It's on YouTube. I'm not making this stuff up. We recommend stock $4 or $5. It gaps to 5. 5-minute breakout range. Stops at the low of the day. It ran. It then consolidated. Broke out. At this point, we raised our stop loss to here. It went higher still. Consolidated. Broke out. At this point, we raised our stop loss to here. We bought it at 4 on Friday. We're currently at 8. We're not letting this go. And we got out of this stock up here at $7.78 a share. Okay? Now, knowing what we know now, and seeing what we've seen, how nice would it have been to have been out at $7.78 a share? Right? It just went too far too fast. And I just don't like it. Could have gone to 18. I don't know what it's going to do, but I'm not going to look 100% overnight gain in the mouth. And I hope you don't either. Should sell half or raise stop loss. Bob, that's I mean, you could do either. I would sell half. I mean, I just like nailing down profits when things are good. Okay. But if you want to raise a stop loss, I would raise it at least on some of it very, very tight. I mean, say you put it at the low of the day, which is much room as I would possibly give this thing if you had the whole position. You're risking a chunk. Like if you bought it here at 30, okay, and you're up 117%. If it stops you down here, that 117 turns into 85. So I mean, you're giving a decent chunk back. That's kind of part of the game. If you trail to stop, you're always going to give back that top 10, top 20%. But I would have zero qualms about selling here. I don't care if it goes to 200. I'd have no problem taking this profit in here if you bought the 20s and 30s and it's at 67 in, 2 weeks? How long has it been since we got into this one? Yeah, so FTC is a stock that trades, as you can see here, CLSE, London Stock Exchange. FLTCF is an over-the-counter stock. that trades on the US representing that. Some brokers were letting their people buy FLTCF and not FTC. Mine, Interactive Brokers, would not let me buy this one, but it let me buy this one on the New York Stock Exchange and the London Stock Exchange. Okay. I don't know. There's not a lot of rhyme or rhythm to it. That was kind of an odd one. Now, as I'm saying I would sell, it's still going higher, right? So listen to, I mean, you may not listen to me, but like, look what this thing's done. Gap, tighten, breakout, all right? Stop loss low of the day. Consolidate, breakout, stop loss low of that swing. Consolidate, it is now breaking out, stop loss low of that swing. If you want to just play it the way we did, do that. Put your stop loss right now at $65. I'm sorry, what's the low? Hold on. 64.75, okay? This is what I would do if you want to see this thing keeps running. I'd put my stop loss right here. And each time today, just keep an eye on it. Each time it consolidates and makes a new high, raise your stop to the low of that consolidation. And if it keeps doing this, ride this sucker all the way. Ride her till she bucks you, right? If it does like this, and it goes into 80 today, great. When it breaks through here, your stop loss should go up to there. When it breaks through here, my stop loss would, just choke this thing off. Keep tightening up, riding it higher. That is what I would do. Any questions? E4 insider stock, yeah, not bouncing yet, but we got a lot of insider buying here, so we're giving us a little bit of room. Cleveland Cliffs, very, very strong. Resource play, still a little volatile. I don't see a great buy setup, but the action looks good here short term. Cost, same thing. Not a lot of action here lately, but still holding nicely into the 50-day moving average. Really, really high relative strength. A strong stock, strong area. Nothing to scare me out of this thing yet. Just want to see it bounce the next week or so. What do you think about DraftKings? That DKNG? Yeah, I don't love this failure, but I'll be honest. If I was going to buy DraftKings, this is where I'd buy it. You've got kind of a retest entry. So, and some of these, it's like, got to blur your eyes a little bit, right? But, it had this, I think, a really pretty consolidation here off the lows. It pushed through, had a nice initial move. That's like 10, 11% in a couple of days. Has for some reason pulled back, which I'm guessing is earnings. And this is what I would look at as kind of a retest. So I think if you like this stock, it's not on my radar, but this is a stock you want. I think you could buy this here. Risk, call it 3, 4, 5%, right? Put a stop loss at like 23 and a quarter. Okay. That's going to get it right beneath. It's going to be, if it goes back inside this base, if it gets below the 50, below the 21, I'd put a stop loss like right there. And you're not risking a lot of money. But if this is in fact consolidation, buying off the lows, if this is going to start a new stage 2 and this thing's going to get back into the 30s, man, to get this thing here at a 5% risk is a great way to do it. It's not an 80% probability trade setup. It's probably a 30-ish % probability trade setup. But of the positives I see, this is where I'd want to buy. Just like I would have ideally bought right here as it broke out with a stop loss, in here. So nice little retest entry. If it's going to run, this is where it should bounce. I'll say that. Okay. Okay. Yes, Lee. Primarily longer time frames, looking at log scale. Only because, like, if you look at, if we look at gold, say, and we're on like a monthly chart, well, I don't really see much detail back in there. But if you go to logarithmic, it really puts things in perspective. And if you're not familiar, a logarithmic scale means this distance, like, let me just show you. Let me show you. That's 50% down there, and that's 50% up there. Notice they're the same height, right? Now, watch this. Watch what happens when I take it out of log scale. See how different they look? That distance there is the same percentage move as this one here. That's why everyone they look at Warren Buffett's wealth. He made it all in the last 5 years. No, you moron. That's just the compounding. If you put it in log scale, okay, his wealth creation kind of goes like this. But when you're making 10% on $100 billion, that's a lot more than making 100% on $1 billion. So it looks skewed. But like this, just to me, is misleading, right? And over here, that's same as 200. Look, that's like, you see the difference? That blue line on the left is a bigger win than this one on the right. It's just misleading. So in log scale, though, it evens that out. Okay. All right, guys, listen. If you are in here and you are not a member of my Black Ops service, how dare you, sir? How dare you? I'm just kidding. It's $5 if you want to join. I don't know why. I got a strike on YouTube doing these live several months back. I have no idea what I said. They won't tell you. But they shut down the channel for a week, and we had to do these on Zoom only for like 6 months. We're finally back doing them here. If that happens again, we're going back to Zoom. So if you're not a member, you're not going to get alerts to them. But go to tradewithross.com. There's also a link below the video if you want to sign up. But you'll get access to this industry strength indicator you can add to your charts. You'll get these live sessions. We have another live session every Thursday with one of my analysts, John Fade. More of kind of a war room type situation. Fire away. You'll also get my weekly newsletter. So, for example, the one I put out, and it goes out every Friday. This one I talked about copper on Friday. Here's that email. You guys should have gotten it. They go out at 7:30 p.m. Eastern. But talking about, what we're seeing in copper, what's happened historically. I just try to share a big trade opportunity or an area of the market looking strong or something I think you'll find valuable. Anyway, all that's included, $5 for the year. Click the link to get signed up. And otherwise, I will see you guys next Monday, same time, same place. Until then, trade well. I look forward to seeing you very soon. Thanks, everybody.